Alright guys, so I hope you've been enjoying and learning a lot from the Value Momentum Investing course, and you've been applying what you've learned to, number one, identifying the greatest companies out there through the fundamental analysis that you've learned, and to buy it when it's at a huge discount, or at least trading at valuation, or better, at a discount to valuation, and entering at optimal points when it's making a dip on the uptrend, when it's at a support level, when it's reversing from a downtrend to an uptrend, going through the 8 steps of value momentum investing. So I'm just creating this video to share with you basically how I've been applying those principles to my own accounts, and how what kind of results you can expect as you do so, right? So right now it's May, right? It's the start of May 2019. This is one of the accounts that I have using those value momentum investing principles. So currently you can see the month to date, or rather the month itself, up 5%. And for the year to date, which is from January to now early May, the account is up 40% return for the year, or rather for the first 4 months. Now, while it sounds pretty good, do remember that in investing, your portfolio does not go up in a straight line. Okay, prices don't go up in a straight line. They are going to be cyclic. It's going to go through ups and downs. So although I'm up 40% for the first 4 months, I can't extrapolate it and say, okay, I'm going to be up, 80% or 90% for the year, because you never know what's going to happen in the next half of the year. I could be up 40% right now, and the next couple of months, there could be a sell-off in the markets. I could be down to 20% and up 30% and up 10%, and I could end up the year up 30% or end up the year up 80%. So you never know what's going to happen till the fat lady sings. And the important thing is not to be psychologically or emotionally affected by the short-term results of your portfolio. Okay, so my point is this, that if your portfolio is up, like me, 40% in the first 4 months, don't be too happy, because it could still go down, before eventually going higher. And if you're down 20% instead for the first 4 months, don't be too upset, because again, it could be up another 80% for the rest of the year. So the point is, in investing, to always keep a long-term perspective, that you bought great companies or you bought the ETFs, you know that it will eventually be higher. It will eventually go up. Okay, especially the index ETFs, the S&P 500, the Dow Jones will always go up eventually. There are 3 things I'm certain about in life. Number one, we're all going to die eventually. That's one thing I'm certain about. So live your life to the fullest. Don't bitch about the small things, because eventually we're all going to be dead anyway. All right, so number one. The second thing I'm certain of is this: no matter what you do, your wife will always find something to complain about. Number 3, the third thing I'm certain about is that the market will always go up eventually. The index will always go up eventually. So never be too upset in short-term volatility. Use it as opportunities to accumulate at great discounts. Now, at the same time, if you buy very good companies, same thing. Eventually, you'll always go higher. And the short-term ups and downs gives us opportunity to accumulate again at lower prices. But having said that, no company remains great forever. Okay, a good company could eventually become a mediocre company. And that's why you have to constantly review the financial statements, the fundamentals of the company. That if the company is no longer increasing sales, cash flow, and net income consistently, then you have to exit that company and to redeploy into a better company. Okay, so if you do that consistently, you are sure that over time your portfolio will grow, and so will your wealth. Okay, so I'd like to talk a bit about the last couple of months. What were the companies I was looking at? And if you have been receiving my monthly reports, which you should as a student, receiving my monthly market updates, where I update the stocks I bought for the month, the stocks I sold, what's in my portfolio. So you should be getting all those updates every month. But I'd like to drill a bit deeper in this video to really talk about, again, why I bought those companies, why I added, why I did not add for some, and the points in which I began to accumulate my position. And hopefully, as I do that, you begin to learn a lot more and can apply it to your own portfolio. Alright, so on this page, which is the portfolio page, you can see some of my positions. And again, like I've taught you in the course, never put all your eggs in one basket. Always ensure that you're diversified between several great companies. So have at least 8 to 10 stocks in your portfolio minimum. And of course, don't have too many, not more than 20 or 25, because it's really hard to keep track of too many positions. So some of my positions in this particular account is Amazon, Boeing, Alibaba, Baidu, Facebook, Google or Alphabet, and JP Morgan. Just bought a very small stake in 3M to start off, Microsoft, Tencent, and United Health. And you can also see several of the ETFs, which is the GXE, the China ETF, the S&P 500 ETF, the SPY, and the Robo ETF, which is the robotics ETF, as well as the BOTZ, the artificial intelligence ETF. Okay, so let me just talk a bit about the several of the companies, why I went in, when I went in, and the valuation I was looking at. Alright guys, so let's go through a few examples right now. Some of these stocks I've mentioned many times in the training course itself. I've also mentioned them many times in my regular YouTube videos on my market updates, as well as my monthly reports. Okay, so the first stock which I've again mentioned very, very often is Amazon, a stock which I believe that you have to own because this is one of the dominant companies in the world right now. In fact, Warren Buffett just announced that Berkshire Hathaway, his company, just started acquiring Amazon, and he was kicking himself for not buying earlier, right? But it's never too late, because I can tell you that, 5-10 years from now, Amazon's going to be a lot higher than it is today, provided, of course, the company remains on track of managing it well, of course, right? Because there are no certainties in life, okay? So let's look at Amazon, and let's take a look at where I started accumulating and where I would start accumulating in the future again. Okay, so first of all, you have to remember that before you buy a company, you have to do the fundamental research, and Amazon passes all my criteria of a great business, right? Consistent sales, profits and cash flow, low debt, high growth rates, so on and so forth, right? Wide economic moat, great sustainable competitive advantage. It's basically a great company. So it's all a question of what is the price that you're going to buy at, right? You always want to buy at a discount, and to buy when the price is hitting some support level or reversing into an uptrend. So let's take a look at Amazon, the intrinsic value. Again, in the value momentum investing course, you've already learned how to calculate the intrinsic value. So you should be able to do this yourself by now. If you still have issues, send an email to my team. We'll help you to check your workings, right? Okay, so Amazon, as you can see, based on the current, okay, by the way, this is not updated. So the recent update based on Amazon's last earnings would make it a lot higher than this. So this is based on the previous quarter's earnings, right? So Amazon, I valued it at $2,276, two grand, right? So this is the intrinsic value of Amazon. So anything below that is cheap, right? Like I said, if you take into account the last earnings report by Amazon, it should now be worth about $2,500, 2.5K. So going to the charts, let's see where I started accumulating. So I've been actually buying Amazon for many years, right? So as you can see, during this uptrend, every time the price corrects near to the moving average, you could buy over there, buy there, buy over there, buy over there. And of course, this was the bear market in the December period last year, right? So if you bought here, for example, you bought here and this happened, sure, these entries would have been underwater temporarily. And that's fine because you can't predict the future, right? And remember that when you invest in a company, as opposed to trading, when you're investing, you do dollar cost averaging. So never go all in at once, always buy in stages. Average in your price so that you get a good average price over a period of time, right? So if you bought here, you added over there, your average price would be somewhere over there, Okay, so even with this sell-off, it's still above your average price. And that's why it's really important to enter the market when you're investing in stages. So always buy every couple of months, average in your price, okay? So that bear market, again, gave a great opportunity to accumulate shares again. But like I said in the course, you never want to buy. Oops, give me a second, sorry. You never want to buy when you see a clear downtrend, right? So when you're seeing this pattern of making lower highs and lower lows, okay, you never want to enter, because on a downtrend, sure, it is cheap, but cheap can get cheaper, low can get lower. So in the short term, remember that markets are emotional, they are irrational, they are not logical. So something that's cheap could go a lot lower, okay? So you always want to buy when the momentum is turning, all right? Now, would you want to have, could you have entered over there? Sure, it is possible. You can see that it made a higher high, it made higher low. You know, some of you may have entered there, right? And no worries, right? Because it was a legitimate breakout, but you can see it made a double bottom over there, reverse back up. So I started to reaccumulate somewhere about, let me see. I'm do my best to recall where I started accumulating. Yeah, somewhere over here, started buying over there. As it crossed above the 50 moving average. Remember that you always want to buy when it's above at least the 50 moving average, because the 50 moving average acts as a resistance. As you can see, there's a resistance here, so it hits the 50 and plunges down again, right? Let it go above the 50 and find support at the 50 moving average. Okay, that's the best. Now, of course, you've learned that the strongest change in trend is when the 50 moving average crosses above the 150 moving average. So this is a very strong change in trend, right? But you could enter even before you have the 50 above 150 confirmation. You could enter initially with a small amount of shares, as long as you see higher highs, higher lows, and trading above the 50 moving average. So that's when I started taking an initial entry, and it went sideways over here. So you can see there's a strong support. So I started buying every time it hit the support level, and then it broke above this resistance. You can see, let me draw the lines in, it's a bit clearer over there. There we go. All right. So this was a clear level of resistance. So if you want to buy at the support level, it's fine. So I bought at support, accumulated support. When it broke out of the resistance, I thought, great, time to get in again. But wait for a slight retracement, I started buying here again. So now it's right now here at 1962. So based on our valuation, we know that it is still cheap. Amazon is worth about $2,500, which is somewhere up here, 2,500. Now, the previous high was 2,000. So I expect Amazon to definitely clear 2,000 to go to at least 2,005 in the short term, in the next couple of months. But again, it will not get there in a straight line. It could go up, boom, it could come down again, go up, right? It's like a wild horse, right? But again, if you're confident about the fundamentals, you know what it's worth, you don't care, right? If it drops temporarily, it's a chance to buy more, right? To average in, okay? So although I think that, although I know that at 1962, let me just erase all this. Okay, so right now it's at 1962. So although I know that at 1962 it is undervalued, I would not jump in here right now. Why? Because based on the technical charts, you can see it's a bit overstretched. I like to enter when the price is near the moving averages, right? At least near the 50 moving average. So you can see that currently, you could draw a bit of a channel like that, okay? So some people would say, okay, I'm going to buy at the channel, and there's nothing wrong with buying at the channel, but again, I prefer it to come back nearer the 50 moving average, all right? So if it drops down to maybe about 1850, I'll be a buyer again, right? So remember that even though you know it's worth a lot more, but never get in when it's near the top. Remember that stock prices move in wave patterns, and it's like a breathing pattern. Breathes out, breathes in, breathes out, breathes in, right? So it will always do that. Remember, what goes up must always come down before going higher, okay? So never have the FOMO of fear of missing out and jumping in when you think that you're late to the train. Yeah, the train will always come back eventually, all right? So a lot of people, when they see, hey, I'm missing the train, I'm going to get in, and the moment they get in here, what happens? Boom, it goes down, and they go done, right? And they panic, they sell. What happens after they sell? It goes up again, right? So the market is designed to screw the person with weak emotions, the person who's short-term minded, right? The market screws them all the time. So to make money, you have to think contrary to your natural instincts. You have to think differently from the crowd, and to always enter when you see a sell-off, right? When people are panicking and they're selling, that's when you want to buy, okay, to catch the next wave up when the next wave comes. Provided, again, you have done your fundamental research, you know it's a great company, it is undervalued, it's going to go higher, you just have some short-term panic in the markets. In fact, we could be seeing an opportunity coming up really soon to buy these great companies at a bigger discount in the next few days, because Trump just tweeted this morning that he's going to increase China tariffs by 25%, right? And he's going to screw China, right? So the market is going to kind of like have a temporary decline tonight, which I'm going to watch with excitement, because this means that I get to buy my favorite companies at a panic discount again, knowing that it's going to go up eventually because I've done my fundamental research. And let me show you something really interesting. I always tell people, do you know the best time to so-called sell your stock and buy it back again? When you read the mainstream news, and the mainstream news tells you to buy stocks, that's the time to sell, okay? And when the mainstream news tells you that it's all gloom and doom, that's the time to buy. You always go opposite of the mainstream news, because the mainstream news is there to screw the average retail investor, because they are fed a lot of these things by the big banks that are not your friends most of the time. And I'll give you an example, right? So just check this out. This was about, this was on the 1st of May, okay? So today is the 6th of May. So this was 5 days ago. Now, 5 days ago, what did CNBC report? They said major Wall Street banks are telling clients to be ready for a sudden rip higher in the markets, okay? So they're telling their clients, buy the stocks, buy, it's going up, right? Now, guess why they're doing that? Banks are not stupid, right? They do things for a reason. One reason could be, I'm just guessing here, right? That, see, the banks tell their clients to buy so that when the clients are buying it, when the clients are buying it, the banks would sell it to them at a high price, because the banks want to get out. See, when the banks, the big players, they want to sell their shares, they entice the small players to buy, to push the price up so they can sell it to the small players. And oftentimes when they tell their clients that the market is going to go up, usually it's a sign that the market is going to crash, right? Because the market always does opposite of what most people think. And today, which is on the 6th of May, 5 days later, we just got news that the market is going to crash 500 points. Okay, so you can bet that when the market opens tonight and the market crashes tonight, and probably for the next few days, what do you think these clients are going to do? Those clients that just bought on that advice, they're going to panic and sell again, right? Oh my God, I bought high and it's crashing, I'm going to sell. And once they sell, what happens? That's right, the big players and the banks are going to buy back cheap again, right? And round it goes, and the rich get richer and the poor get poorer. So if you want to get rich, never read the mainstream news and listen to advice, okay? Never follow the herd and the crowd. Always do opposite of what everyone else is doing. That's how you make money. That's how I make money consistently every single year. Okay, anyway, enough of my bitching and blabbering. Okay, let's go to the next one, which is Facebook. Now, I've talked about Facebook a lot in the course videos on my YouTube channel. I've talked about it a lot, and let's see where it is right now. So Facebook, as you know, I have been very bullish on it because I love Facebook. Great company, passes all the fundamental 8 steps I've taught you in the course, and you can see that the intrinsic value of Facebook is $226, right? That's the intrinsic value. Now again, this is based on the figures before the recent earnings announcement. So now with the new announcement, it should be higher at about 250 or 260, right? So Facebook is worth at least $226, which is somewhere there. Okay, so we know that this is the real value of Facebook, and this is above the previous high of 218. Now, what happened over here? This was the big sell-off because of the the Facebook data scandal. And so whenever a great company is hit by bad news, data scandal or whatever, it's a great time to look at the stock, because these problems are often temporary, right? They may cause a short-term drop in the profits, but in the long run, it's a great buying opportunity as long as it passes the fundamental steps, right? So when Facebook initially gapped down, you don't want to be buying, right? Because again, in the short term, markets are irrational, they're emotional. Cheap can get cheaper, low can get lower, and it went on this clear downtrend channel. So you never buy when it's trending down, right? So when did I start buying? I started buying when it popped up here, right? When it made a higher high and made a higher low, right? So that is a early sign of a change in the trend. And again, you want it to be above the 50 moving average and start accumulating over there, okay? And then over here, I started accumulating more as it bounced off the 50. Again, I always like it to hit the 50, be near the 50 to accumulate. And again, over here, you can see this was a nice breakout. So this was a resistance, breakout the resistance. I added more here, and boom, it's now at 195. So once again, for Facebook, we know it's worth $226. This is the true value. It's now 195. It is undervalued. But having said that, okay, I would not add more here because again, it is overstretched above the 50 moving average. Always wait for it to come down. Remember, what goes up must come down. So I'm going to wait for it to come back to about 180 and start buying again. All right. So you have to study both the fundamentals and the technicals to always get the best returns on your investment. Okay. Alphabet. Let's look at Google, also known as Alphabet. Okay. So you can see I've drawn my support and resistance levels in there. You can see this was the previous high. It hit the high and it gapped down on disappointing sales revenue recently, which to me again is a temporary issue because they were cleaning up their YouTube platform, removing a lot of conspiracy channels that led to a short-term decline in their revenue growth. But in the long run, it's good for the company. So in the long run, I love Alphabet, I love Google, and I'll buy more every time I get a chance. So again, let's take a look at a quick valuation. Okay, so Alphabet is worth $1,500. That is the intrinsic value based on my calculator, which you all have from the course, and you can calculate it yourself. You guys should be good at that by now. So we know that. So Alphabet is worth $1,500. So you can see many of the big tech companies are undervalued. They are really cheap. They're still really cheap. So that is the intrinsic value, $1,500. I know it's worth $1,500. And you can see that there's a resistance over there. there's a strong level of support over here, okay? Right now the price is here. So if you buy it right now, again, it's really undervalued, right? You could buy it here, no worries, because there is a bit of a resistance and support here. You could buy the support. But I suspect tonight when the market opens, there's going to be a bit of a sell down because of the China trade war that's again brewing up again because of Trump, his tweet. So this could slam down again. So if this slams down to $1,000, boy, I'm a big buy at $1,000, right? But you know, if it goes to 1050, I'll buy here as well, right? I mean, there's so many stocks to look at. I'm just going to cover another one which I've talked about again recently in my YouTube videos, which is Boeing. Again, because of the tragedy of the plane crash, we had a bit of sell-off in the stock. Oops. Okay, which I've talked about, right? So I started accumulating Boeing because, again, it's a great company. It's just that short term, it is screwing up on a lot of things, which has to be resolved, which will eventually be resolved if they have to fire their CEO. You know, they'll do whatever it takes, I believe, because it's a dominant company. And if you look at the fundamentals, Boeing is worth about $493. Okay, 493. Now this is based on its current financials. Now, roughly, if I'm not wrong, 20% of their business is from the 737 MAX 8, which is the screwed up plane with the screwed up software, right? So assuming that they can't sell those planes anymore, assuming that they lose that model, what you can do in a worst case scenario is to discount 493 by 20%. So if you take a 20% discount of 493, if you take this and you multiply it by 80%, which is a 20% discount, that is about $394, which means worst case scenario, Boeing is worth $394, assuming that you know they can't sell those planes anymore. So 394, where's the price right now? So right now the price is selling at 376. Okay, so it is undervalued even with the worst case scenario, right? And you can see there's a strong level of support over here, right? There's support over here. So I've been accumulating over here. It's still not going up yet. Eventually it will go up, right? I'm really confident eventually it's going to go up. But could it, you know, crash back down again? Sure, anything can happen, right? In the market, anything can happen. And that's why, once again, you never go all in. You always buy in stages, dollar cost averaging. So you buy a bit here. If it goes back to 300, hallelujah, buy more at 300 because it's eventually going to go up, all right? So this is a little update to show you basically how you apply what you've learned in the value momentum investing course and how you apply to real life scenarios. Remember, always identify great companies, buy them at discounts or fair value, enter when you've got a strong support, reversal of trend. As long as you follow these 8 steps, you're going to build your wealth, your portfolio far faster than anyone else. And never ever listen to advice from the mainstream news. Never ever blindly follow the crowd. Think independently and act, okay, opposite of other people's emotions. Hope you've enjoyed this video. Take care. I'll see you in the next one. Hi, so if you like the video, you can subscribe for more videos by clicking the subscribe button. If you want to find out more about our live training courses in Asia, go to wealthacademyglobal.com. For online professional stock and forex trading courses, you can go to piranhaprofits.com. So this is Adam Khoo and I'll see you soon.